All right, what's up, guys? Good morning. Happy Saturday. Quick sound check here. Make sure we are G to G. And yeah, should be a pretty fun week ahead here. With the market, we got a couple updates in the works. I think they sent out a few updates for TradingView. So for those of you with the Thinkorswim version, that should be out early this week, and then we have a webinar on Thursday, and a lot of fun things in the works here. But all right, I think we're good on the audio, so let's take a quick 40,000 foot view of the last couple of weeks. And this is a daily QQQ. And we had a beautiful squeeze back here end of June. Got the breakout, got the pump. You had the pullback last week. And I think the saving grace for us here in the room, on the pullback, the leaderboard never flipped bearish. We did go from bullish to neutral, which means in the short term, everything's just a little bit tuckered out. You had big breakouts, you had a strong market, everything's pulling back to a daily 21 EMA. It's not bearish, it's a little bit more, right, take a breather, take a step back, let things just kind of work themselves out. But thanks to the leaderboard, never got caught short on the dip, and now you got the QQQ with a little bit of a brand new all-time high back on Friday. So till things change, and the great thing about trading, they could change Monday morning. But till they change, I think it is the bull's market to lose. So based on our leaderboard, for starters, who are our weakest parts of the market? Who are all the troublemakers? And that'd be healthcare, energy, real estate. Transport's kind of lame, biotech a little bit lame. So for longs, you want to avoid things like a Lilly, a VRTX, XLV, EOGs, Intels, NOW, UNH, all the above. But if the board says bullish, we're not really thinking about these kinds of names. Better yet, we're looking up here, and our two strongest indexes are QQQ and the S&Ps. Now, one little thing worth noting, there's a decent, call it divergence. I'll blow it up here. Okay, so index strength, you got the QQQ at 98% of its best score. It really can't get any better. We have the S&Ps at 92%. That's really bullish. And then you have the drop off with Dow Jones at 43 and the IWM down here to 40. Not bad scores, of course, but pretty big difference between the QQQ and the S&Ps. And I think a big part of that is just it's a very tech SMH heavy market. Your Googles, your Nvidias, Amazons, for me, my favorite stocks. And we can see that down here on the sectors. Our strongest is the Big Ten basket. That's these guys in a weighted basket. Number 2 is XLK, that's big tech. Third place is gold. We'll give gold some credit. Fourth place is the SMH, and fifth place is XLC. That's communications. That's a lot of Google, a lot of Meta. There's your leadership, and then in the Big Ten, nobody's really all that bad anymore. Tesla's getting better. Apple's getting a lot better. Did any of you guys catch Apple last week at all? David, I know you mentioned the 15-minute and the 5-minute squeeze from yesterday. But yeah, Apple's on steroids all of a sudden. Microsoft's pretty good. Netflix not too bad. And then there's a kind of reminiscent of Google. There's a beautiful monthly squeeze setting up on Amazon. It's not your strongest on the Big Ten, but not too shabby. So for me, and I think for all of us, until things change, the good news is the current picture says your strongest parts of the market. They're the parts of the market I always make the most cash on. Good example being if you look at the, so here's our spreadsheet tracking the 100 trades we took from, June of last year up until July of this year, which means we got to get a brand new spreadsheet going. But on this tab right here, we took, so here's 70 trades. And these are nothing other than the indexes, the futures, and the Big Ten stocks. No energy, no healthcare, no XLPs, no McDonald's, no Boeings. Big tech, big semis indexes, we're almost at an 80% win rate. 70 trades, 54 wins, and 16 losses. Now, by comparison, the others would be some Palo Alto, some Snowflake, JP Morgan, Crowd, Monster Beverage, TJ Maxx, Alibaba, Docu, Roku, GameStop, OKLO. On the others, we have a 50% win rate. And you can make money on a 50% win rate, but it's a lot easier to make money with almost an 80% win rate. And I think the reason is, why do I trade the Googles, the Nvidias, the Broadcoms so well? Not always, but I think most times when those names are strong, when they're sitting up there at the top of that leaderboard, they're getting alignment from a lot of different directions. So take, right now, a great example is Google. Knowing, of course, things could change tomorrow, or change on Monday, rather. What are all the things working in Google's favor right now? Let's count them out. For one, you have a big whopping monthly squeeze. All right, that's your compression. You're building up all the energy. There's one thing working in your favor as far as, hey, Google might be gearing up for a big move here sometime soon. The squeeze is one. Then we have the 15 different directional criteria. Checking all the trend boxes, all the structure. We got good momentum. So your squeeze is one, and your 15 points is another 15. There's 16 things working in your favor. We find that monthly squeeze not too far from the ideal buy zone. We'll call that 17 things. You have lower time frame buy signals inside of it. We'll call that 18 things. I think most importantly, there's a very strong QQQ behind it. There's a very strong XLK behind it and a very strong XLC behind it. That moment in time is way different than, all right, I'm going to crank up the scans and here's a nice 30-minute squeeze. And we had a trade like that in the room, going back a few weeks ago. All right, market opens up. Let's go do some scans. And the leaderboard said very clearly, you should try to buy nothing other than big tech, big semis. Leaderboard said watch Nvidia, watch Broadcom, watch Google. Don't really go watch anything else. Take it a step further. The weakest sector on the board was XLP. So what do I go and do? We crank up the scans, look for a daily squeeze, and here comes Kroger. And Kroger had a really solid daily squeeze, but it wasn't part of your strongest sector. It's not a big market-leading, heavily weighted name. It had a couple things working in its favor. We want as many things as possible working in our favor. Good market behind it, good sector behind it, good setup behind it, then all the other details. So again, based on that leaderboard, I'm not going to go look for a needle in the haystack in healthcare or energy or real estate. And here's the thing. There might be a few healthcare names this week that go on and break out and make big moves. We're trying to think, all right, what can I do 25, 50, 100 times in a row and be really confident I'm going to come out on top? And I think it's that pattern of, what kind of market am I in? We bullish, we bearish, we neutral? Are we thinking day trade, swing trade, long, short? In the context of that picture first, who are my strongest indexes? Am I looking at Dow Jones stocks? Am I thinking we're trying to buy or short the small caps? Is it more of a QQQ market? Then you drop down, all right, sector-wise, who's neutral, who's crappy, who's good? Then you keep on going from there versus, hey, I found a good-looking daily squeeze. They're a little bit more a dime a dozen. So yeah, all of that being said, for me this week it comes down to pretty much one chart, and everything else will follow suit. And that would be the chart of that Big Ten basket. I'll grab the code for you guys here. Copy that up. If you copy and paste this code towards into that ticker box, it pulls up the Big Ten chart. So I'm going to put that here. Yeah, we're buying grocery stores reboot. Who does these things? All right, let me put that in the chat here. But yeah, copy and paste that. That pulls up the Big Ten basket, which is, of course, these 10 guys. But all right, let's look at, of course, the daily squeeze. And like I mentioned, when this basket sets up in a big fashion, look at the weekly squeeze from last year. To me, no coincidence at all. It's my first six-figure month. The most important names, the market-leading names, the strongest names, and my favorite names to trade, collectively in a perfect weekly squeeze. You got to jump in and hit that aggressively. They give you a few weeks of beautiful upside. There was a big weekly squeeze back here, big weekly squeeze back here. And when the basket sets up, it doesn't mean, all right, I'm waking up and I'm going to go buy all 10 of them. The process would be, if the basket looks good, who are my top 2, 3, 4, maybe 5? Right now, we have the Google, the Broadcom, NVIDIA, Meta, and the TSM. Look at them first. If they don't offer you a good entry, all right, Apple's got 80%. I can work with that. Tesla's not too bad. Keep the overall basket your focus. You're trying to pick a few of the best in show. So for me, by far, the most important setup here for next week is going to be this daily squeeze. Actually, better yet, first things first, it'd be the 4-hour squeeze. If they can get the 4-hour chart going, they should get that daily squeeze going. So that'll be a big one, and more importantly, if that fails to break out, to me, it's the first really good heads up. Pump the brakes a little bit. Be cautious on the big tech, big semi buy side. Right now, this is their immediate ammunition. If they can't go and use the immediate ammunition, things could get a little wonky. But like I said, till things change, I think it's a 4-hour squeeze and a daily squeeze, poised for a breakout. From that, we can jump over to the QQQ, the old Q-tip. And for this bad boy, we have a daily 15-minute and a 5-minute. Little details here. It's a good-looking daily squeeze. We're not getting that white or that green arrow just yet. Check the indicator. We have great structure. We got all the trend. It's just we're lacking that momentum push. Could we go from 575 into 580 without getting momentum back into a bull cycle? We could. If we're jumping in here trying to call for a path into 600, you need that thing fully locked and loaded. A squeeze breaking out, momentum, all the fixings for the push. So we call that maybe an A- setup, not quite an A+ setup just yet. Along the same lines, you have the XLK, the tech ETF. Short-term point of view would be the daily and the 4-hour squeeze. But maybe the point of view up until between now and the end of the year would be the monthly squeeze, which actually fired long. They're trying to break it long here on that candle from yesterday. From yesterday's close, rather. Which does imply in most cases, not a gap up every morning, not in a big straight line. But bigger picture, you're in a good uptrend. Really good uptrend. You've got bull momentum. You have great chart structure. Squeeze just fired. That can give you pretty good follow through into September, October, towards the end of the year. Doesn't mean along the way you're not going to get a few good pullbacks. In the context of a monthly squeeze trying to fire, pullbacks are usually going to be great buying opportunities. And frankly, it's all kind of the same idea. The Big Ten basket, the QQQ, the XLK. But I like the fact they're all trying to line up here. All right, let's go working through a few of the Big Ten characters. And Simon says it's Google, Broadcom, NVIDIA, Meta, TSM, and then everybody else. All right, so for the one they call the Google, we were about a week early on the breakout idea, guys. Here's a funny thing about trading: they don't hand out paychecks of being a week early. But yeah, big time pop yesterday, finally getting through that big 200 strike. And I don't believe the monthly squeeze actually fired long yet. No, yeah, not yet. Doesn't mean you have to wake up and buy a bunch of calls up here at 200 on Monday morning. Again, take that step back, take more of that 40,000 foot view. Unless things change in the overall market in a big fashion, I think they take that monthly squeeze. We're looking up in October, November, December. And she's maybe a $225, $230 stock. We get a really good market, maybe a bit higher. But this is your combination of the compression, momentum, the structure. A lot of things working in the old Google's favor. Which, they had that back here in November of 23. That gave you a modest 45-50% push. And then anything for a Monday morning entry. We'll maybe see what's up here on that 5-minute squeeze. But yeah, bigger picture between now and the end of the year. I think that monthly chart's one of your more important setups. All right, from Google, we dropped to the Broadcom. And we bought some Broadcom yesterday. Check the board, and Broadcom belongs to the SMH. And we got the SMH in 4th place with 90%. Off the Big Ten, Broadcom is in 2nd place at 98. We can work with that. So Broadcom, 4-hour, 15-minute, and a 5-minute squeeze. And looks like you got the green arrow there right before the close. That's your 5-minute. We're playing it here off of the 4-hour. Pull it back, chop it, enter the squeeze, and then we bought the 310 calls for Friday. Would like to see if we can't get it moving to about 315-ish. Which, if they can fire that squeeze, should be a pretty realistic target. So we're liking Broadcom here, and then in 3rd place is, drumroll please, goes NVIDIA, Meta, and then TSM. So NVIDIA, Broadcom's big brother. What do we got in the NVIDIA? 4-hour, 2-hour, 15-minute, and a 5-minute. Believe they call that a quadruple squeeze. The only thing you're lacking off that 4-hour chart's just the Momo. And that can imply if they can get Momo back in the favor of the bulls, they might want to break that out, get a pretty good push going. 13 points out of 15. We're trying to wait for the full 15. The full shebang. But I do like that 4-hour squeeze, and then they maybe got the trigger. Yeah, they got the trigger on the 2. So now we look at that 2-hour squeeze and say, if you can get a pop going, that pop can maybe lead to a bigger move as that 4-hour squeeze goes and fires. All right, we got to keep the 2-hour NVIDIA on the rotation for Monday. And then what about the 15 and the 5? Here's the moral of the entire story. I will buy any good-looking squeeze across any time frame on until things change on these 10 names and S&P QQQ. So pretty much the mission ahead here for this week. We're just trying to see who's got a couple here for us into Monday. But all right, a handful to watch on NVIDIA, and then I don't think too much happening in TSM. No, I lied to you. 30-minute, 15-minute, and then, interestingly, a brand new daily squeeze. My preference, of course, would be, they pop it, they chop it for maybe a few more days. They keep on developing that daily squeeze. And then checking the indicator, we have the trend, we have the structure. Waiting on that Momo. In a case like this where your daily chart doesn't have that bull momentum, you can drill down to an hourly, 30-minute, 15-minute. Go find the trigger, play it off of the intraday time frame, which we can maybe do depending where things open up in that 30-minute, 15-minute for Monday. But better yet, eventually maybe a bigger swing position off the daily squeeze. All right, and then we have Apple, Tesla, Microsoft, Netflix, and Amazon. Yeah, Apple was on Apple was on something this week. It has a lot more work to do before I think we're looking up and saying, "Hey, that's the best looking daily chart in the market." But definitely a big step in the right direction. Let's go take a peek here at the weekly squeeze. If they can turn that one into that one, kind of thing, I think you got to step up and look for a big trade. All within reason, of course. You don't go and bet the ranch. But that combination of bigger time frame, compression, market-leading name, the structure, the prettiest of the colors, it's, again, I think a spot where you got to go for it. And Apple's not there yet, but again, all good steps in the right direction. And then anything popping in Tesla. Very, very quietly, goes back into to a brand new weekly squeeze, and we are getting the slingshot signal. So your slingshot means they have pulled back on the price. They've pulled back on momentum, but they've kept really good trend and really good structure. They're just missing momentum. So now in the context of that squeeze, if they can take that MACD line, pull it back above zero, you're giving a really good-looking car a fresh tank of gas. All right, Lambo in the driveway. You get the MACD hook, now we get the full tank of gas. Jumping in, launch control, and off we go. There's a few here actually. Weekly, 3-day, 2-day, and a daily squeeze. I think a little early to call for it, but they do get that Momo shift. It's a squeeze that could get you eventually back into 400, 420. Might be a process getting there, but all that matters is you're getting there. All right, 3-day squeeze is, these can be tough to trade. You got bear momentum. Momentum points lower, you have bull structure. Structure points higher, and you have neutral trend points sideways. In comparison, here is your Google monthly squeeze. And everything's, pretty much on the same page. But yeah, that new weekly squeeze, that could be dare I say it, could be a bit of a sleeper pick here. Not that Tesla's really a sleeper, but it's been all about the Broadcoms, Nvidias, and Googles. Little something to watch there. All right, and then the last three are Microsoft, Netflix, and Amazon. Microsoft has a little 15-minute, and then Netflix. Again, these can't be top priority. Can I buy Amazon this week? Definitely. Can I buy Netflix? Can I buy Microsoft? I can buy any of them. But the goal should be, if I'm buying Amazon, that means I looked at Google, I looked at Broadcom, I looked at all the strongest names first, and they've got no squeeze, no entry, playing that process of elimination. So Netflix, I don't love here, and then Amazon. Here's your poster child as far as what can you get from a monthly squeeze. And the poster child would be Microsoft. Pull back, print the squeeze, get the trigger, and you get a casual, what's this? It's up about, we'll call it 40% off the buy zone. They can take their sweet time to get going. When they get going, they pack a bigger punch than your 15-minute squeezes, your 30-minute. These are your big boys. That being your quote-unquote poster child. Again, here's the XLK having just fired. Here is Google having not fired yet. Room for more fun. Here is the semiconductor sector. Really, really important to keep in mind. In this example, this could pull back to like 250. It's a 15% pullback off the highs. Nothing changes about your monthly chart. You'll have your structure, you'll have your trend, momentum, big, beautiful bullish squeeze. So it doesn't mean we're going to go higher in a big straight line, but I can't look at that chart and think, yeah, the top is in. Selfishly, I do want to pull back first, bring it back down, make it a bit cheaper. Then we jump in, load the boat. But from a 4, 5, call it 6-month point of view, that kind of squeeze behind it, and it hasn't fired yet. I got to look at it and think we're closer to the beginning of the party than we are to the end of the party. So yeah, please give me a good pullback here. That takes us to Amazon. Brand spanking new monthly squeeze. Let's check the track record here, shall we? White arrow monthly squeeze back in 2015. The initial kick there was about 50-60% push. We then had the COVID special. And boy, was that special. We then had another white arrow squeeze back here in 2022. That one actually failed and broke short. And we pull back, we bottom, we pump, and now we're going for the glory again. Brand new monthly squeeze, all the criteria, really good entry. Till things change, gotta like it. I don't like that for, all right, I'm waking up Monday and I'm going to buy a 250 call for next week's expiration. I like it for, I think I'm going to look up in December and Amazon might be a $275 stock. Could be dead wrong, but probabilities-wise, that's what things try to point towards. All right, cool. Now what can I go and do with that? I could take the approach of, all right, I'm going to go buy some 275 calls for January expiration. I'm going to buy enough to accept the max loss, and I'm not going to look at it again. Do it in a different account, set it and forget it. Come check back in a few months. Do that with the options. You buy an in-the-money call, buy the out-the-money. You can buy the shares. The other thing you can do is say, all right, if there is going to be a path from 220 into 270, if that is the outcome, there's a really good chance along the way, any weekly squeeze we get, any daily squeeze, 4-hour, 15-minute, 30-minute, hourly, those shorter time frame squeezes, they might have a lot of wind at their back. Imagine you're back here trading every 30-minute Amazon squeeze you get. You're having a field day for 2, 3, 4 straight months. Buy the dip works out really good. Every squeeze works out. Every breakout pattern works out. The ultimate wind at your back. To our benefit, we're finding it nice and early and finding it, right near that 21 EMA. But it's more of a bigger picture idea. So shorter term, I would want to focus a little bit more on a Google, a Broadcom, Nvidia, Meta, but shall keep it in the back of our noggin. But all right, that is in a nutshell, guys, our entire focus. Not based on biases, not based on opinions. Leaderboard says market is bullish. Your strongest pocket of the market is the Big 10 basket. Your strongest indexes are the QQQ S&Ps. Sectors-wise, got Big 10, XLK, Gold, SMH, Communications. Again, what is XLC? It's a little T-Mobile and a lot of Google Meta. You like Google here for a short-term long. You should value the fact there's a good QQQ behind it, a good XLK behind it, and a good XLC behind it. You're stacking so many different layers of edge. Versus, hey, here's a good-looking grocery store stock, part of the shittiest-looking sector, and I'm going to go buck the trend, and I'm going to go buy that one. Can it work? Yeah, I think it's a tough trade. We want to be really good in easy markets. The week we're buying Kroger, here comes Broadcom. Number 1 on the board, part of the by far strongest sector. Nothing but buy triggers, and then here comes a, picture perfect 30-minute squeeze. I'm playing cleanup on aisle 5 with Kroger. Broadcom is handing out layups. I'm going behind the back from half court. Here's a nice little, mid-range jumper for you. That's a repeatable process. Like I truly believe and know if I do that trade 100 times in a row, I'm going to make some really good cash. If it's a Kroger trade 100 times in a row, yeah, it's a good-looking chart, but a bit of a lone wolf. The sector looks awful. Not really a big, heavily weighted name. I don't think I could do that 100 times in a row. I think I would blow my account before that. And the results and the proof in the pudding basically says the same. You take all the trades, you're knocking at about 70-ish% win rate. You take all of the riffraff, XLP, TJ Maxx's, Starbucks, Southwest Airlines, T-Mobile's, Procter & Gamble's. It's a coin flip at best. A lot of mental energy as well. Big 10 indexes futures. 70 trades in, almost an 80% win rate. And again, I think the quote-unquote magic there is when these kinds of things are in play, they're getting hit from every angle. Just think about Google. Google's a big piece of the XLK, the QQQ, the S&Ps, and XLC. So yeah, when the board looks like this, hey, Google's really strong, and so is QQQ, so is the S&Ps, so is XLC, so is XLK. A lot of layers of edge. You know who looks pretty good right now is I think Johnson and Johnson. And hey, give the thing credit, man. It's part of the weakest sector. It's putting in really good work, but I don't think it's the easy, repeatable process. Johnson and Johnson's doing the Lord's work here for healthcare, and then here's Lilly. You don't have that right now in big tech as much. So that, my good friends, is the primary watch list, says the leaderboard. And then, a few things here off the beaten path. One would be Palantir. Jeez, wow. Hadn't looked at it since Wednesday. Very strong, not a great swing trade entry. But you don't need a big swing trade entry all the time. You can make it continuation trade. Drill down to a 15-minute, 30-minute squeeze. There's your shot. So Palantir is mighty strong. And then you have the hood. Daily squeeze is looking good in the hood. And then, let's go look at our top 20, shall we? But we got to keep the main thing the main thing. Had we done that a couple of weeks ago, we're never getting long Kroger. we would have had to have gone through about 15,000 charts before we landed on Kroger, if we're playing that process of elimination. But anywho, top 20. Google, GILD, Palantir, NVIDIA hood. I would ignore Johnson & Johnson. It's part of healthcare. Walmart is a part of XLP. Staples. And your staples are actually shaping up. Which might be a Walmart only kind of thing. Yeah, big breakout on the Walmart, and then who else we got? Shop, Lam Research, and then we will wrap it up here with a quick look at gold, and then any questions, anything y'all want to look at, drop it in the chats, and I'll get you on with your weekend here. Always appreciate you guys coming out on a weekend. But all right, real quick peek here at Shop, and then the gold bug. All right, my wife's favorite activity, the shop. You would think my wife is buying shop. Big old gap up, and again, more of a continuation idea. You find it in that big weekly squeeze, big daily squeeze. Then you're thinking, all right, swing position, give that trade time, maybe building up to slightly bigger size. When they've made that move, all right, now I'm going to drop to a 15-minute squeeze. And you're kind of trying to milk the thing for whatever it's got left. All right, and then final one here is gold. I'll give you the point of view here via the gold futures. And you can play the idea through the gold futures, GLD, all the gold things. Looks bullish, and I think a lot of breakout potential. But I'll play devil's advocate just to be that guy. For the record, I would never short gold here. So maybe not being devil's advocate, but if you really want to call for another one of these. Big 3-day squeeze, they break it out, and they push, they pull back, they push, they pull back, they push, just the good stuff. If you're looking for the good stuff, it's tough to get that in a big, sustainable fashion without momentum behind it. Meaning, if you're really bullish here on gold for a bigger play, best case scenario, it's a lot like the 3-day squeeze from back here. It enters a 3-day squeeze. Really good trend, really good structure. You're waiting on momentum. And you're waiting from November into December, into January, into February. 3.5, 4 months down the road, they finally get momentum. Now they can take advantage of the compression, the trend, the structure, all the other things. It's a long here, but I figured I'd at least mention. But all right, guys, that is the major walkthrough there. One more peek at the leaderboard. Not to be a broken record, but until things change, could change Monday, could change 12 weeks down the road. Till they change, leaderboard says it is the bulls' market to lose. But as always, want to be selective. I am avoiding healthcare, energy, real estate, biotech. Right up my alley, very much QQQ S&Ps and a Big 10 focus. We've got those 310 calls on Broadcom for this coming Friday's expiration. And then we'll get going on Monday, and we'll see what's up from there. But yeah, should be a fun week. Market action, webinar, indicator updates, and some hopefully exciting things coming here on the leaderboard.